The time for year-end tax settlement years. A wave of new tax breaks will take effect starting with this year's settlement, aimed at supporting families and easing financial burdens for workers. These changes cover areas including marriage, childbirth, and general spending. Our finance correspondent Moon Tae-ryun is here in the studio with this topic. Tae-ryun, first, tell us about what a year-end tax settlement is.
Right, Jungmin. Well, so a year-end tax settlement is essentially a process in which salaried workers reconcile the taxes they've paid throughout the year with the taxes they owe based on their actual income, deductions, and credits. So it's essentially a tax adjustment to ensure that individuals have paid the correct amount of income tax for the year. So typically it takes place at the end of the fiscal year, which is in January for South Korea. And because there are new tax reforms this year, it's important for taxpayers to familiarize themselves with the regulations to maximize their benefits during the upcoming year-end tax settlement. So the National Tax Service will be offering a simplified service online to provide basic data for taxpayers to report income and do their deductions starting from January 15th.
And what are some significant tax reforms made this year worth noticing?
So a key area of focus this year has obviously been to address the population crisis. And earlier this week, the country officially became a super age society, with those aged 65 and over accounting for 20% of the population. And as a result, a sweep of tax benefits for families starting from newly married couples to those with children have been introduced. A new marriage tax deduction has been set up for couples registering their marriage between this year and 2026. So they'll be eligible for a 500,000 Korean won tax deduction, which equates to roughly $342 that they can redeem only once, regardless of whether it is a first or subsequent marriage. There is also a range of childcare support reforms that are being rolled out, especially for medical expenses. So for families with children, all medical expenses for children aged 6 and under will be fully deductible. Postpartum care is also now included as a medical expense, with even high-income earners with a total salary exceeding 70 million Korean won able to include up to 2 million won in postpartum care expenses within their deductible medical expenses. And the government is also fostering private support for childcare, with company-provided childbirth support funds fully exempt from taxes for up to 2 instances per employee. Additionally, a new reform to the child tax credit means that families with 2 or more children between 8 and 20 years old will receive an additional 50,000 won tax deduction, going from 300,000 won to 350,000 won in total.
What are some tax deductions available for salaried workers outside of marriage and childcare?
So actually these reforms as a whole, they represent a very significant shift in the tax landscape, and they offer support to families and workers across various financial situations. And this means that there are several changes outside of marriage and childcare, including addressing housing cost burdens for buyers and renters alike. So the maximum income deduction for long-term mortgage loan interest has been increased to 20 million won, with the standard price threshold for eligibility raised from 500 million to 600 million won. And workers with a total salary of 80 million won or less can deduct 15% of their annual rent payments up to a million of 10 million won. So for those with a total salary of 55 million won or less, the deduction rate is even higher at 17%. And in South Korea, housing subscription savings accounts enable people to buy a house at a cheaper price than the market price, which makes them very popular. The deduction limit for housing subscription savings has also been increased to 3 million won per year from 2.4 million won.
If you make contributions to pension accounts or housing subscription savings by December 31st, you can receive tax deduction benefits. However, if you terminate these accounts within a certain period without justifiable reasons, after receiving the deductions, termination surcharges may apply.
And to encourage spending to boost domestic demand, an additional income deduction is available for increased credit card and cash receipt usage. If spending has increased by more than 5% compared to the previous year, 10% of the increased amount up to a limit of 1 million won can be deducted. These measures aim to provide broader tax relief and encourage consumption and investment among South Korean taxpayers.
All right, we'll have to check out these for my own year-end tax settlements. Thanks, Haeriang, for your report.
Thank you for having me.